The New York Fed's latest household debt and credit report is out, and Richter from Wolf Street breaks it down in an article we're about to cover called "Here Comes the HELOCs, Mortgage, Housing Debt to Income Ratios, Serious Delinquencies, and Foreclosures in Q2." And the headline news is mortgage debt keeps climbing, HELOCs are making a comeback, but overall housing debt burdens are historically low. And so I'll show you a couple of the charts, but let me share some of the key data here. Mortgage balances, they're up $131 billion, or plus 1%, up from Q1. They're up $416 billion, or plus 3.3% from year over year. They stand at $12.9 trillion. HELOC balances are on the rise. They rose 2.2% quarter over quarter and 8.2% year over year. And they're now stand at $411 billion. That's up 30% since 2021. Housing debt to income ratio has dropped to 59.2%, the lowest since 2003. And to give you a sense, before the housing crisis in 2008, this ratio exceeded 90%. So it's nearly dropped. It's nearly dropped in half. Interestingly, about who holds mortgage risk, who holds the balances or the risk on outstanding loans, Fannie Mae, 38.8%, Freddie Mac, 33.2%, Ginnie Mae, 28%. Banks just hold just less than 20% of total mortgage and HELOC debt, which means that taxpayers and investors are carrying all the risk. Delinquencies, they've dipped to 0.82%, which is very near the lowest they've ever been. HELOC delinquencies are similar at 0.85%. Foreclosures are really low, 52,800 in Q2, which is below the averages that we had in 2018 and 2019, which ranged from 65,000 to 90,000. Let me show you some of the data here because it's really good-looking stuff. I'll just go through a quick look at it. Here's HELOC balances. You can see here coming out 2010, 2011, super high. They're reasonably low, only 50% of what they were once, or a little bit more than 50%. If you look at the next thing, mortgage and HELOC debt as a percentage of disposable income, you can see, other than during the pandemic years when the government we're just all awash with government money, that debt to income, mortgage debt, and HELOC debt to disposable income is at near lows, just looking great. You get the idea. I would strongly recommend checking this article out. I did a LinkedIn post on this today. You can get a link to the article and get a really good overview of the data on my LinkedIn post. I will attempt to put a link to Wolf's article below, and just let me, I talk about Wolf Richter all the time, but he just puts out such great content that I think every mortgage and real estate professional would benefit by reading. His stuff is free. Subscribe to it. He's constantly just data. It's awesome. He'll oftentimes has contrarian viewpoints, which I really like, and he's not sensational, which I appreciate. But check this article out. And with that, thanks so much for giving me some of your time. I appreciate it. I hope you appreciate information like this. Check me out on my socials. Have a great weekend. Thank you.